Okay, so let's have a look at the fifth adjustment for the 2022 exam paper for company account McCormack. So this has got to do with the bank statement. So the figure for the bank and the trial balance has been taken from the firm's own records. However, a bank statement dated the 31st of the 12th, 2021 has arrived showing an overdraft of 48,950. Comparison of the bank account and the bank statement has revealed the following discrepancies. So our records, the bank records, aren't matching up. So these are the reasons why they're not matching up. So we've got four different discrepancies, four different errors that we need to fix. So a check for fees of 4,950 issued to a director has not been presented for payment by the 31st of the 12th, 2021. So if something has not been presented for payment, that means no money has entered or left our bank account. So I'm not going to do anything with that. We're just going to leave it blank. No adjustment because no money has left our bank account. So we don't have to fix anything on it because it's not been presented for payment. Number two, a check for 26,700 issued to a supplier has been entered in the books, your cash books and your ledger as 27,600. So it's telling us here, our cash book, that's our bank, and our ledger, that's our creditors. So we wrote a check for 26,700, but what did we do? In our books, in our bank, and in our creditors, we put it down as 27,600. So we've overstated or overvalued our bank account, and we've overvalued our creditors account. So the first thing we have to do is find the difference between the two of them, and then adjust your bank account and adjust your creditors account. Now you have to find out whether bank is an asset or an overdraft or liability. So your bank, 68,300, it's on the credit side, so that's a liability. So that means that our bank overdraft is not as high as we thought it was, because this check for 27,600, it should have been for 26,700. So we're going to reduce our bank by that amount. And then your creditors then, so we would have overstated our creditors with the amount of money that we paid them off. So that's not going to happen. So a check for 26,700. So we're going to have to adjust our creditors by that 900 as well. So we're going to decrease our bank by the 900 because the bank is not as high into our overdraft as we thought it was. And our creditors then, we're going to have to increase our creditors because we would have recorded paying them more than we actually did. So we recorded as being 27,600. We've only actually issued 26,700, so we owe an extra 900 to our creditors. So with our bank working 9, the amount for our bank is going to be taken straight from the trial balance. So we said 68,300. We got this check. Is it a check? What's it say it is? So it's a check. And the difference is this 27,600 minus the 26,700. So it's going to be 700. So we're going to decrease our bank, or sorry, 900. So we're going to decrease our bank by 900 because that money didn't come out of our account. And then we're going back up to our creditors, and we have to increase our creditors by 900. So remember, we've been working already for our creditors, working 3 as part of our statement, our sale or return. So the amount that we have, we're going to use the new amount, which is 71,700. We got your check of 900. So remember, we're increasing our creditors by 900 because in our books we've recorded that we've paid extra money which we wouldn't have. So the check for 26,700, that's what we wrote the check for. This is what we recorded for. So we're saying we paid an extra 900 from our creditors, which we didn't. So we're going to add that 900 on, and then you're going to adjust the bank because we're saying that this 900 didn't come out of the bank account because we recorded incorrectly in our bank itself. So remember to record the creditors in your balance sheet as a current liability. We're not going to close off our bank yet because we know there's a couple of more adjustments there that we need to adjust. for a bank account. Okay, so part 3 then of the adjustment 5 in relation to the bank statement, it says that a credit transfer for 4,500 has been received on the 31st of the 12th, 2021 in respect of a debtor who has previously been declared bankrupt. So anytime you got a person who's declared bankrupt to the business, there's 3 things you're going to do. Number 1, this money we received, you're going to put into your bank account, so you're going to reduce the bank overdraft. We need to decrease the amount of money that's owed to our debtors, and then you need to create a bad debt for the profit and loss as part of your expense. So this represents the first and final payment for 3 cents in every €1 owed. So this is not the total amount. So what we have to do, this 4,500 will reduce your bank. This is 30 cents for every €1 owed. So that's kind of like 30%. So you're going to have to find 100%. That's how much you're going to decrease your debtors by. And then the difference between this figure that you calculate here, 100%, and how much we have received, that's going to be how much we haven't received. So that's going to go into your expense, your bad debt expense. So with this then, your bank is going to decrease by 4,500. So the bank, so you got adjustment already, 6,740. Then we got your debt, your bad debt that we received. So we received 4,500. So because this is a bank overdraft, it means your bank's going to go down by 4,500. Then we got our debtors. Need to find out what is the 100%. So 30%. So 30% is equal to 4,500. 1% is equal to 4,500 divided by 30. So that means 100% is equal to 150. Multiply that by 100. So 15,000. So your debtors then. So our debtors figure from the trial balance, it's going to be 249,800. And then we've got our debt, which is 15,000 that we're not going to receive from them. So we're going to take them away from each other. That's going to give you a new debt figure, and then you're going to record what we haven't received from them in the profit and loss account. So the difference between this 15,000 minus the 4,500, okay, is 10,500. That's how much we're not going to receive. Okay, so for that 4th part of the bank statement, so your bank, the debt we received, 4,500, is going to reduce our overdraft. Our debtor then, we need to reduce our debtors with how much money we're not going to receive from them. So the total is going to be 15,000. And then the bad debt that's going to be written off is the difference between this 15,000 and the 4,500. So 10,500 is going to be the expense to the business. So that's one way of doing the bad debt. Come up here. The second way of doing the bad debt then is a credit transfer of 9,000 has been received on the 31st of the 12th, 2021 from a debtor. So once again, your bank overdraft is going to go down by 9,000. It's in respect of a debt that was previously written off. This represents 75% of the original debt, and the debtor has agreed to pay the remainder in 2 months. So because we're going to receive a repayment here, we're going to create a bad debt recovered. That's going to be extra income that we didn't think we were going to receive. So that's going to be the 100%. And then the difference between the 100% and the 9,000, that's going to go to increase your debtors, because that's how much they say they're going to pay us in the next 2 months. Okay, so your bank is going to decrease by the 9,000. Your debtor is going to increase. So we're going to have to calculate what is the 100% and find the difference. And then your bad debt then is how much are we going to receive in total from this guy who was previously written off as a bad debt for us. So the amount for the bank, so remember we've got an adjustment already for the bank. So it's going to be 62,900. We're going to receive this check. of 9,000. So it's going to reduce our bank overdraft. Then your debtor then, so you're going to find out what is this 100% for your debtor. So we know that it is 75% is equal to this 9,000. 1% is equal to 9,000 divided by 75. So 100% then is equal to the 120 multiplied by 100. So 12,000 is the total debt that we're going to receive from the debtor. So that's what we're going to create as your bad debt recovered. The bad debt recovered then is the 1,200. So up here then, so we would have calculated the total debt to be 1,200 or 12,000. So that's going to be your total that we're going to receive is 12,000. Of that 12,000, we received 9,000. So we need to adjust our debtors to include the 3,000 that is due to us. So the amount for our debtors as part 4 is this figure here, 234,800. We got our what do you want to call it, credit transfer or bad debt recovered, which is 3,000. So remember that this 12,000 is how much debt we're going to receive from them that we didn't think we were going to receive. That's your bad debt recovered, that 12,000. That 12,000 is 100% up here. So that's the total debt that we've received. We have received 9,000. So we've 3,000 left to receive from him. And he says he's going to pay that within the next 2 months. So that's why we need to increase our debtors by that 3,000. Now remember, we would have used the debtors in the previous adjustment here, part 3. So this is not our new debtors figure. This now is our new debtors figure that we might use later on. That's going to go into your balance sheet as a current asset, not this one here. So a couple of parts involved in that, quite big ones there, that these can be used as individual adjustments as well. So what I suggest you might do is you might kind of press pause on the videos you go through them, take your time with them. Not too much difference between this one here, the debt first and final repayment, and this one here with a bad debt recovered. Just a small little difference between creating a bad debt for your expense, creating a bad debt recovered for your ad operating income, and then one is going to reduce your debtors and the other one is going to increase your debtors with how much money they have to pay you. And then we've got our figures then for your bank as well, which now goes into your balance sheet as a current liability. So remember, take your time with it. It's adjustment 4, your bank. It's coming a little bit into the adjustments, especially with the company accounts. Remember that if it's not presented for payments, we don't do anything with it. And if you have any questions then, just send me on a message.